me check this out and see if everything's coming through. Hopefully we've got stuff coming through here. So I'm going to skip I'm going to make sure that this is actually coming through. I'll fill you in here in a second. Let me make sure that this is actually coming through here. I'll fill you in here in a second. Let me make sure that this is actually coming through here. Okay, I think we're good. All right, so now that we're live, I'll explain what I'm doing here just in a second. So, all right. So good morning, good Friday morning. So I'm just glad to be able to speak this morning. It looks like we've got sound coming through. Everything's good. So first things first, right? So let me turn this down too. Okay. All right. So here's the thing. So yesterday, right, everything looked good. And then when I go to play the countdown, it somehow wiped out my voice, right? I couldn't get it back, couldn't figure out how to get it back, didn't know what was wrong with it. Right. And even worse, I turn it back on later in the day and it's working and I don't know why it's working again. And then this morning, everything's good. I go through the checks again this morning and then I go to start the countdown and then my voice is gone again. So there's something. So the good thing is up until about 1 minute ago, I had no idea what the problem was. So, because if you don't know what caused it and then you don't know why it started working again, that's really bad. Right. And then, so up until 1 minute ago, it's like, I had no idea, right? And then I see it go bad, and then I had to restart a bunch of stuff, and fortunately, it came back up. So that's why there's no intro, there's nothing this morning. So we're just going to cold start this. Better than nothing, right? Okay, and all right. So I'm happy about that. At least otherwise it's mass confusion in your brain because you don't know what the problem is. You don't know what the fix was, and then you don't know what the problem is. So I think we're getting to what the problem is, and I can actually potentially start to diagnose this. All right. So all right. Hopefully you guys can laugh along with that. I was very frustrated yesterday. You put together a bunch of work, and then you have no idea why it's not working, and So anyway, all right. Thanks for all of you. We got a good group going this morning. Let me say good morning. We got BDG. Yeah, good morning. I hope we can hear Craig today. I hope I can hear myself today. All right, Trumpet. Yes, good morning. Good morning, you Trumpet. Rachel Hawk. Good morning. What did I miss? I'm not sure what that is. That yesterday or is that referring to this morning? All right, woke. All right, Zero Woke. Good morning, new day brings new financial news. Rachel, okay, good. I can hear Craig. All right, we got smiles. All right, okay. And Rachel, I'm not smiling. What is it when you said the other day when I'm smiling, like look out, So this is a good thing. All right, so we got a good thing here. Okay. All right, let's get going. We got some stuff to do today, and I want to try to catch up on what we missed yesterday to some degree. We won't get everything, but there's a lot of stuff going on again today. And then I did this panel last night, right? And on Curtis Yarvin, a name I highly doubt you've heard. Okay, you've probably maybe heard the name Yuval Noah Harari. Okay, now he's the quote unquote guru for the World Economic Forum, the left, right? Obama helped promote his book. He was kind of Klaus Schwab's little, think tank kind of a guy. And then we've got this Curtis Yarvin. He's on the other side of things. Okay, he's for the right, right? And I guess politically, again, I try not to get into politics too much here because, but you can't. Sometimes you just can't stay away from it because it's a factor in all of what we're thinking about here, and so. I'm kind of coming more down the middle here. I'm really kind of throwing away both parties, to be quite honest. And I don't know if I follow a libertarian. I'm just trying to be objective here and find the truth, right? I guess that's the thing. I'm just searching for the truth and not really worried about any political agendas or parties or whatever. I am worried about agendas, right? So there's this guy, Curtis Yarvin, and let me just briefly talk about that because a couple weeks ago, I talked about, or late last week, early this week, whatever. I did a thing on J.D. Vance, all right, and his process from Yale to his first jobs in the legal space, and then being an operations guy for this, biotech science operation, and then going to work for Peter Thiel, and then Peter Thiel funding him with Narya Capital. And then Narya Capital making some investments in some different things like Rumble, like Strive, which ties in with Vivek Ramaswamy. And again, We don't know how well all these guys know each other. We don't know how well J.D. Vance really knew Charlie Kirk. But here's the thing. I looked at that when he essentially, ran Charlie Kirk's show from DC, from his office. To me, that felt like a hijacking. Okay. And then the fact that he escorted, Charlie Kirk on Air Force Two, to me, again, you can say it's the government paying its respects. President Trump couldn't do it, so J.D. Vance, perfect role for him. But the problem is that sounds great, right? And it fits really nice if you want to take that angle. But if you take another angle and you come from this Curtis Yarvin angle, okay, and you come from this Peter Thiel angle, and you come from this Andreessen Horowitz and Oracle, Larry Ellison, and, Joe Lonsdale and Alex Karp of Palantir and, Silver Lake and what's the name? Anyway, when you come from this angle of these technology, you can turn this into politics and call it a technocracy. Okay. And I know a lot of people, again, why does this matter? Right. Well, I think it matters a lot. And we're trying to sort this out, right? I think we're all looking for the truth. We're looking for what's coming next, right? We're forecasters. We're trying to be forecasters. We're trying to forecast what's going on. Okay. We know that there's something not right out there. We see cover-ups all the time. We see things going on. But I'll tell you what, when you watch and you go through the facts with this Curtis Yarvin, and you remember, and I wish I had clips to run, but look, I'm just happy to, actually have a microphone that works at this point. So it is what it is. And I'm all, again, things were going pretty well for us there. We had Frankie that could troubleshoot this stuff. I mean, probably the greatest, one of the top troubleshooters I've ever seen. I mean, I've seen him get put in stressful situations and the guy comes through, so, very talented from that angle. And, and I don't have that anymore, right? So I'm kind of on my own. And, but here's the thing, we kind of had this momentum going and, I don't know where I was going with that, right? But somewhere I was going to the point where, dark MAGA, right? Do you remember when Elon Musk was at the convention, right? The RNC, and he came out with that dark hat on, and he was promoting dark MAGA, okay? And you're kind of like, what is this, right? Like, what is he referring to? Like, it was just weird, right? And then people get him doing the Hitler salute and this and that, whatever. They make a bunch of stuff up, right? But that's not and then Doge, right? Doge is a really sketchy thing at this point. At the time, it felt great, right? It felt really good. This is what we all wanted, right? We're all going to come in here. We're going to clean up this government. We're going to cut costs. We're going to grow the economy, and we're going to get this thing back. All we really want is to see it turning up. We want to see the reality. We want to see the truth. We want to see the right trajectory, pointing in the right direction, right? The problem is the truth hurts, right? And I've found that out in the last month. When you try to tell the truth, you usually get smacked upside the head, and it really doesn't work out in your favor, right? Fabricating or going along with things or not sticking your neck out. I mean, that's the way to go, to just continue to, just kind of get on the wheel, right? Do your thing, get on the wheel. You tell the truth and you call things out and you get hurt, right? You get burned. And so that's the thing, people don't want to do that because it usually costs them. It costs them a job. Whistleblowers, that's why whistleblowers don't come out. It costs them a job, right? It costs them their career, you know what I mean? And then they get ostracized. They hurt their family, right? Because now they don't have the income. They got to sell their home. They got to move, right? All these things that happen that we take for granted, right? We want whistleblowers. We want to hear the truth. But we don't feel the pain, you know what I mean? Unless we're in that and we're trying to do that and we're taking that angle, right? So again, we need more whistleblowers. We need to somehow reward whistleblowers and not punish them, okay? And we need to uncover the truth. But here's the thing, right? Back to Doge. Now I think a lot of people can say, yeah, that was a dead end road. That went nowhere, right? We made this big, it was huge, right? It was probably the foremost topic for a good couple weeks there. It was just in the news, right? Getting pushed to the top of the top things people are talking about, right? And that's all Curtis Yarvin. See, that's the thing. It goes back to this think tank guy, right? And who is this Curtis Yarvin? Obviously very intelligent, traveled around the world as a kid, programmer, understands, the technology side of things. Why he's the chosen one, right, that these guys are listening to, I don't really know. But Peter Thiel listens to him. Elon Musk listens to him. J.D. Vance is listening to him, right? And this is the scary crew. Why is it a scary crew? Because they control with Larry Ellison getting essentially Larry Ellison, Andreessen Horowitz, and Silver Lake getting control of TikTok. Okay, Musk controlling X. And we know that they're limiting people, right? I have friends who have gone viral, 1.4 million views. These guys are hitting things when they hit a viral, quote unquote, viral, post, and and obviously people pass it along. That's what viral means, right? It just multiplies and gets out there. They're curbing that stuff, right? They're maxing people out at 50,000 views. That way it can't go viral, right? Last night on this panel, Aaron Day, right, normally gets, I don't know, we were getting 1,500 to 2,500 live viewers on X. Last night we had like 300 or 400. Now the topic isn't hot, right? Who's Curtis Yarvin, so forth. And a lot of people don't want to hear it, right? Because it feels to me like this really is the truth. And we're trying to sort out the truth. It feels to me like we're onto something here, right? This is, and it's very problematic. And if we don't call it out, we're going to end up in a very bad situation, okay? And again, you can say, well, President Trump wouldn't let that happen. I don't know, right? I don't know. Look what happened with COVID, right? They shut the world down for 2 weeks, literally. I mean, like I've said before in here, for 2 weeks, for 2 weeks, I'd go out on the street near me that always has traffic on it, and there was no traffic. I stood out there for 5 minutes, and it felt like I was in the desert, right? Just looking to the right, looking to the left, no cars. I'd run for a mile or two, stop, look, look around, no one, and so they shut the world down. So what happened under President Trump, we know who named Warp Speed, right? It was Ken Griffith of Citadel, okay, a hedge fund guy, who again is probably an operative, right? I mean, I don't know that for sure, but everything raised a red flag to me that this guy's an operative, okay? And he's one of the wealthiest financial guys. I mean, this guy's got $100 million property here, $100 million. I mean, this guy's got properties in London, New York, Florida, Chicago, everywhere. $100 million here, he just buys the top properties, right? Worth billions. And definitely powerful on the financial side of things. And so they named Warp Speed, right? They were the ones, we have the video footage on that where they took the claim for naming this. So the question is, we need to sort out the truth. And that's why I'm just stepping away from, I just don't even really care about the political, siding with anything, right? I'm trying to side with the truth. All right. So that'll help us kind of set the stage for today, right? That's one of the things I want to get out there. It was a 4-hour thing last night. Aaron Day did probably about 2 hours of it. And then we came on, and this interesting character came on, this guy named Jeremiah. Very smart, right? Very, very smart. Very worldly, global, like very, very, very geopolitically savvy. Don't always agree with everything he had to say, but I love that though, right? I want to hear other perspectives, right? Because it challenges me. I don't want to just hear people that sound like me. I just want to hear other people. So I didn't know he was coming on, but it was such a welcome guest to listen to him go on and get to ask him some questions and talk to him. And, and hopefully I can make friends with him and, have some interviews with him and do some things because again, I think he's trying to tell the truth. And so no one will have him on, right? But this guy is really, really intelligent. So again, it's easy to find. I'll throw it in the end of the comment section today. In case you want to go through it, it's 4 hours. You can skip through it and find what's interesting to you. You don't have to listen to the whole thing. But I do think there's very interesting things throughout the whole thing if you really are looking for the truth. And it really makes a case for this Curtis Yarvin and what's going on with J.D. Vance and how he got built, Peter Thiel, Andreessen Horowitz. And it's very scary because, again, I think they kind of, we can sit here and we can argue back and forth about Charlie Kirk, right? Where was the shooter? Is this guy the shooter? Is it transgender? Is it this? Is it left? Is it this? Is it that? Where did the shot come from? Doesn't make any sense. What did he shoot with? We can go, but here's the thing. If you see them utilizing laws, right, that were on the book, that were basically on the shelf and I'm pulling them down, either premeditated or post facto, after the event happened, they like, oh, what can we grab? Let's put this in place. The Charlie Kirk Act, right? This, that. All. When you start seeing those things happen, either it was premeditated or someone sees an opportunity and they're like, hey, this is a chance for us to get this out there. And we can, again, like Pelosi said, you got to sign the bill before you find out what's in it. Same thing with bills like this, right? You got to basically pass it, right? You got to pass the bill before you find out what's in it. So who's injecting a bunch of stuff into this bill that, again, does what? Steals our freedoms. That's what technocracy is about, right? Is technocracy is using technology to steal our freedoms, okay? And we see this going on. And if you really, once you get over the hurdle of, like, Have I been brainwashed? Have I been propagandized? Do I have too open of a mind? Am I too much of a sponge? Am I willing to, bend off? Maybe, right? But I don't think so, right? I feel like I'm pretty open to listening to different sides of things and then making my own decision, right? And that's all I can ask of anyone, is to listen to a lot of different sides and make sides and make your own decision, right? So if you want to listen to some different sides, right, this video that was last night will give you that opportunity to listen to different sides, okay, and make your own decision, right? And that's what we're trying to do. That's what Aaron's trying to do. And once you can get over that hurdle, if that fits with you, and if you make the decision that to me seems like the logical decision, but that's, again, everybody has a different lens, right? But if that, then the key is to move to, how do we combat this if it is coming? But you first have to get over that hurdle, right? You have to get over that hump before you can figure out what the solution is, okay? And the solution is what the founding fathers always said, which was to take back our freedoms, right? They said, we've given you a republic. Now let's see if you can keep it. This technocracy is trying to take that republic from us, okay? In my opinion, right? That's my opinion. Find out for yourself, but I just throw it out there. And if you find that to be the case, and the question is, what do we do to get that back? And the solution is exactly what I think the founding fathers, if they came in today and they could get accelerated and say, okay, wow, a lot of sure has changed in 250 years, and then they say, okay, all right, then they finally adapt, right, for a couple of days, and then they would say, yeah, I think this is how you get your freedoms back, is you got to create a parallel system. Again, it's quote unquote today's version of taking it local, right? Taking it local doesn't mean as much as it once did. I think taking it local means it's still global, right? That's the thing that bends your mind, is this is a global world and boundaries are getting broken down. I want to talk a little bit about the dollar today, because I see some things going on with that, and we'll get into a little bit. I want to look at soybeans and corn and a few other things since today's commodity day, and silver and gold. Maybe we'll look at those. The reason is that I neglected commodities in the past, right? You always just use it as a fill-in day, and kind of what we're doing today, right? I'm talking about this Curtis Yarvin and what I think is going on, because I just think it's front and center, right? And if we can say, like, if you can move past the media, because here's the thing we were talking about last night, is the alternative media space, or the quote-unquote independent media. We're still using the clips and the footage that comes from Fox or this or that or whatever. So we think we're independent, but we're really not, right? And not as there are that many really independent people out there, and that's why I'm kind of liking not running these clips, because I kind of don't care. At first I felt like, okay, we need to run these clips and make our case, right? It's their voice is more powerful than mine, right? So let's listen to Scott Bessent. Let's listen to Howard Lutnick, right? Let's listen to this person or that person or whatever, because then you hear it from the horse's mouth, right? But after a while, you're like, wait a minute. This is who's putting that out there? Bloomberg, CNBC, Fox, right? MSNBC, CNN, whoever, right? They're doing this interview. And we try to be objective and say, okay, we'll just take out what you think is important and get rid of and you can do that, right? We know how you can frame things, right? That's the thing when you're on this end of things, okay, and you're trying to present things to people and you're trying to teach and you're trying to share, right? Share what your work, share your effort, share your years of doing this stuff, right? And share that stuff. When you're doing that and you're on this side of things, you know that you can bias that show however you really want, right? You can say, okay, well, I'm not going to show that clip because that's kind of, and I don't really want to explain that, or I don't want to really, or let's show this, this, and this, and this. And that's what Frankie and I were doing. Is I think we were, like, the way it would work is I would essentially go through a clip, and then, or go through a thing, and I would say, okay, chop, chop here and here, chop, chop here and here. And then I would give it to Frankie. Then Frankie would chop it up. He'd put it in the queue, ready to play. And we'd kind of go through the show. And then he'd talk about it. We didn't really talk much about what we're going to talk about, which was great. That's what I liked about it, is I could give my opinion, and then Frankie would give his opinion. And it was sort of nice, right? And then we could get opinions from the, people putting things in the chat, and Frankie could monitor that, even though I couldn't, as much. And so, anyway, you can bias it however you want, right? That's the reality. So just think about that, because I think that'll make sense. You can bias this however you want, right? You can present what you want, okay? And the problem is you're already taking things that are already being biased and presented. So you're just taking a second derivative, right? The first derivative is the event happens, and somebody in the mainstream media who has reporters and so forth, they have the resources to go out and interview these people, okay? Or they have the inside scoop, or they have the connections, the relationships, whatever. They do that interview. That's already biased one layer. right? Then you get a hold of it and you have to unbias it, or you can add on to the bias, or you can either neutralize the bias or you can magnify the bias, right? You can do whatever you want with it, okay? The key though is now, if it's just me speaking, I don't have anything. It's like I am what I am is what I am. I don't have any bias, right? So in some ways, I'm kind of liking this idea of no clips, you know? I mean, maybe you guys don't like that, but we'll see. We'll see how this works. Anyway, I just want to do that 4-hour video, Curtis Yarvin. We're going to go through and do a thing on Peter Thiel at some point, right? We're also going to talk about the media, right? We think Rumble's free. We think X is, free speech. We think X is free speech. We think TikTok has some free speech component, and it's going to be promoted as being more free speech now that, America has taken it away from China, okay? And we have 80% control over it, and we're going to control the algorithms, and we're going to put it on Oracle's database and their data centers. We're going to store all these videos. Right? But again, you can rage bait people pretty quickly, just like you can skew things. You can, all of a sudden, you can give someone a video. They go looking for a video, they get what they want, and then guess what? Another video pops up right away, right? 40-second attention span, right? We're looking for something, or something gets pushed to us, right? A friend sends us a link, we watch it, and then guess what? The next one comes in, and we get sucked in. It's like, wow, what is this? And you're watching, wow, that's crazy. And then the next one comes, and then the next one comes, and the next one comes. YouTube's doing this, X is doing this, TikTok's going to be doing this. And again, I'm not on these platforms. So again, we just have to protect our minds, I guess, is the big thing. We really, really have to protect our minds, and you have to go looking for the truth. The truth doesn't really jump out at you very often, unless you're founded in, the Bible and things that are foundationally, solid, right? That have been stood the test of time. And again, we don't always know. Again, we could go out. I mean, that's a deep end right there. I need to stay out of that for sure. Politics and religion. I mean, I love them, and I think they're, I got to let that go. Okay. So let's get to work. Hopefully that makes sense. Let me check in the room here. We've got, okay, let's see. When Craig laughs, it's not good, referring to the news. Okay. David Rocket, where's Frankie when needed? I agree, David. I totally agree. Trumpet, Yuck Harari. Yeah, Trumpet. But here's the thing, Yuck Curtis Yarvin. I mean, if please, if you can spare some time, just even 10 minutes, right? Even if you have 10 minutes, just pull this thing up, dive into the middle, just take a stab. Boom. I'm just going right here. I don't care. I'm not looking, and just give it a shot for a few minutes and see if there isn't something that captures your interest on it. TZ Burton, good morning. TZ Burton's had some good comments. We've had a little dialogue. I've really enjoyed that. Rachel Hawk is one of the sides, CNN. Take it local. Yes. What more would the founders say? If maybe you can find a new producer like you using clips, things I didn't see. Yeah, I know. I know, Rachel. I appreciate that, and I think about that. The problem is, this is you don't find someone on the street. There's not everybody. There's not a Frankie on every corner. And you. It takes time for someone to acquire the skills like someone has, right? There's a lot, even though this looks like a pretty simple show, and it's gotten much more simple for me, and I'm making it more simple because I have to, and that's a good thing. And just a little more raw, not maybe as polished like today, no intro, you just come in, fumble around. It is what it is. And, the problem is, it's like, this thing doesn't, it's never made me a penny, right? All I've done, I probably, spent, I don't know, $15,000, $20,000. Somehow you're like, what do you mean? Like, I got a couple little things here, but somehow it adds up, the money that you spend to do the show, the equipment, the camera, this, that, all these little wires and little things, it just adds up, right? And I've never made a penny, right? And I did this for 275 days until the whole thing fell apart with LFA. And again, you tell the truth, you get whacked. We had a good thing going, you know what I mean? And now I talked about this, like there's, today I'm going to talk with an attorney, and we're pursuing some things because there's things going on at Rumble that shouldn't be going on, right? There's definite pay for play there, right? At the highest levels and at lower levels. Okay. That's for sure. All right. And I've gotten this confirmed from, I'm aware of this, right? And I know that there's other people that have confirmed this too, who facilitate production stuff for other big players who are getting 50,000, 100,000 type views, and live eyeballs too, right? So they know this. And the question is, how far do you want to pursue it? And again, it's about the truth. How much are you going to spend, right? So now you're like, okay, you're spending on this, you're spending on that, you're giving your time. I mean, the show used to take me probably 4 or 5 hours to get it ready, I would say, just because you're doing other things. And then you get into doing the show, and then it's like, now I can probably do it. Like, I could probably whip something together in an hour. As long as the day before I was keeping notes is what's going on, and I had some notes, I could sort of organize it pretty quickly. But, it's a lot of time too, So now you're talking about finding another producer, paying them, making them happy, and if you could find someone who's like, yeah, and I have some ideas, right? And the problem is when you run up against brick walls, that's what forces you to find solutions, So that's where I was yesterday. You run up against a brick wall. You don't know what the problem is. Very frustrated. You're like, you're like, come on, seriously, like really, I mean, this thing, you can't, you're frustrated beyond great, and so, yes, I agree. But then how much are you going to spend for that? You know what I mean? And this thing doesn't make any money. You know what I mean? It doesn't, like, we were at the point where I could finally go to good Wall Street people, with 10 to 15,000 eyeballs on it. I could finally, we worked up to that point, and it wasn't right. Those weren't real numbers. Okay. So let's just call that what it is. So, but you could still utilize that, even though they were fabricated numbers to some extent, 10 to 15,000. We'd spike to 35,000 and back down to 8 and back up to 13 and 15. And then days you wouldn't get quote unquote featured, we were at like 500, so you're like, what the heck, right? And again, that's why that, LFA had this opportunity, was because Rumble wanted a market show, right? We tried this with Market Ultra way back when. And they really were desperate for a market show. They really wanted market shows in the morning, right? To round out their offering. And, we blew it, right? Pete Santilli was in charge of the production on that, and he flat blew it. You know what I mean? He just flat blew it, right? That's the bottom line. There is no ifs, ands, or buts. I mean, I wasn't at my best either. Like, I wasn't super great on the camera and stuff, but again, my knowledge of the markets hadn't changed much. It was still, 1.5 years ago, it wasn't much different. It has improved. I mean, actually, it has changed a lot, to be quite honest. I've learned a lot in the last year and a half in a lot of different ways, and you don't give yourself the credit for the growth. But the point is, it's like, at some point, the thing, we were close to being able to quote unquote monetize it, right? In a good way, in the right way, you know what I mean? And hopefully bring back revenues for the show, for Frankie, for LFA, you know what I mean? And then invest in things that actually benefit the people that are watching, right? Put in structures and things. And then you get kicked to the ground and you got to start from scratch, right? And then you get kicked yesterday, you're like, what? I don't, and you don't have anywhere to go, right? It's like, who do I call? I don't have anyone. So those are the things you're trying to work through. So anyway, hopefully that covers it. I don't want to spend any more time on this. I appreciate the inputs. Any ideas are definitely watched and thought about. And, I like this audience, right? I mean, we've got, a group of people in here. It's not great. It's not huge, but it's great, right? And it's, and I appreciate you for coming in and wanting to listen to this. And again, search out the truth. That's the most important thing. Whether it's from me or someone else, you're seeking out the truth. Hopefully I can deliver on that, from a financial perspective. And here's the thing is that I think from the financial angle, I don't think it gets covered. Like, no one's doing this from the financial side. It looks like I'm kind of peeking out here a little bit on my voice every once in a while. Let me turn that down just a little. Hopefully it's not getting distorted. But let me turn this down just a smidge. It's sometimes maxing out. That's all you need, right? Is more distortion in your ears. But I just think that the financial angle, there's so much. It's kind of like speaking a different language, right? And that's the one struggle I go through is, I've got 30 years of a language, and many of you may have very little financial language, right? And so the key is to bring that and try to translate it, not to say like, I'm in this advanced PhD, whatever, and someone else is in kindergarten. That's not the key at all. Like, I'm a believer that, like, I love to explain things to little kids, you know what I mean? Because it's fun, right? It's like because you just love little kids, number one, but two, it's fun because, they're smart. Right. But the problem is people talk over their heads instead of trying to bring it down where they can understand it. And that's what's great, and I'm not trying to say that here. I'm just saying that it's my job to try to make these analogies and share, with no objective other than truth, and that, and that's what I mean when you guys show up and you deal with, the sound issues and so forth. So I've spent a half an hour on this. I can't believe I already spent a half an hour. We've covered no ground. Okay. I'm going to let that be. I think you get it, right? And I just have to think about this from a perspective of, it's, if these Curtis Yarvin things and things like that, and what I think is going on with this technocracy is probably one of the biggest reasons that I keep coming back to do this, because if we don't get people like you to see this stuff and believe it for yourself, right? Evaluate it. One, have it be put in front of you. Two, have you evaluate it for yourself. And then once you evaluate it and you say, wow, then you really get behind a movement, right, that can change things. And so as small or as big as it is, it doesn't really matter, right? It's still the search for the truth. And it hurts, right? Just be prepared, you know what I mean? That when you dive in, it hurts, and I can speak personally out of that over the last month that it hurts, the truth can hurt sometimes. All right. So we got some work to do. Let's get after it here. All right. All right, so today is triple witching. All right, that means that it's the third Friday. This happens on the third Friday of March, September, and December quarters, okay? And it's when stock options, stock index futures, and stock index options all expire simultaneously, okay? So that we've been talking about this future roll, the futures rolling in these stocks from September to December. It's caused did I get caught a little blindsided on this? Maybe, right? Because we were watching closely the September contract. The December contract was hitting the full upside objective a couple times, and then it blew through, okay? And it blew through on a Sunday night when the contract rolled. So it was very deceptive, intentionally deceptive, maybe. I'm not going to go that far, possibly, okay? But the bottom line is it's sustained above these levels, 24,165 in the NASDAQ, 65.47 in the S&P, okay? And rate cuts, all right? Here we are cutting rates. This is what we're going to talk about yesterday. I want to go through a few stills. I've got 10. I can blow through these pretty quick, right? The dot plots. I wanted to show this yesterday. The dot plots, money on the sidelines, and how these different sectors are performing, okay? And what we can watch for if we start to top out in the market. Right now, topping out is taking a back burner, right? Right now, this market's above these levels. It's holding above these levels. We're getting momentum. Every momentum pullback we get is being bought, okay? So that tells me people are coming in. Why are people coming in? That's the question. That can come back to this. It might connect back to this technocracy, okay? And hopefully I can make my case on this. I think we can do this today and at least begin to make a case on this, all right? Okay, economic data. Let's blow through this really fast. I think we got a lot to do, but I think we can hit this very quickly, all right? Okay, and let me get rid of this. Okay, here we go. Testing. Yeah, who knows? I can't. All right, I went out. Oh my gosh, this is unbelievable. $700 soundboard, right? You know, supposedly the best out there, and it's totally on the fritz. So I guess when I want my sound back, I'll just play a little clip that'll jiggle the internal electronic wires, and apparently that'll bring back my microphone. So okay. You can't make this stuff up. All right. Let's see if we can get over here and I can actually go back to this stuff. Let's see if I get cut out or if this will actually work or if this is what's caught. I don't know. We're troubleshooting the problem here on the fly together. Just unbelievable. Okay.
Oh, say, can you see?
Testing, 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 testing. Okay. All right. Uh, we may not have charts today. All right. We might just have to talk through this whole thing. I can't, you can't make it up. You just absolutely can't make it up. Okay. Um, I'm afraid to touch any buttons right now. Okay. So let's just keep rolling. What the heck? Let me clear this off here, see if that'll do it or if that's going to blow things up again too.
Oh, say, can you see? By
Testing, testing. Okay. I am trapped. Okay. I'm in an electronic trap right now. All I can say is thanks for sticking around. You know, I just appreciate it. You can't make it up. All right. We may not touch another button. All right. It says, yeah, I'm getting text messages. Don't move. That's exactly right. The good thing is, at least we're figuring out where the at least I have a I can probably go to someone and now get help on for some help. All right. I may not touch anything here. All right. We may just be stuck on this screen. All right. So, my gosh, hard to keep your train of thought. Okay, let's keep moving. All right, this week we get building permits and housing starts. Right, expected at 1.37 million, and both came in like 1.31 million. You got to question this data just a little bit. All right, but definitely negative. Okay, so if I could show the housing chart, which I actually put time into putting together the housing data, then it would. Let me take this off. Let me see if I turn SuperSource off. If it still works. Yeah. All right. Let me try this. Okay. I think we're good. I think we can function now because I think if I just turn the SuperSource anyway. Okay. I think we can function. All right. So the boy, I hate to touch this. Okay. Let me just leave it for a little while and see if we can't make some progress. All right. Housing, 20% of the economy, you know, can it hold up? I'm going to skip showing that, I think, for now. All right. Here's the takeaway. The big thing on this week is we had 4 central bank things. We had Bank of Canada, US, we had Bank of England, and we had Bank of Japan. All right. The US was the only one that cut. Everybody else held steady. All right. Bank of Japan is talking about raising rates before the end of this year, right? Coming into December, I think, is what they're talking about. Then we get this Philly Fed number. Man, it's hard to not have this stuff. Let me try. I hate to try this stuff, but all right. I think we're good. If I can just get this thing cleared, I think we're good and we can get through the rest of this. Let me try that. Fingers.
oh, say, can you see? Oh, say, can you see? By the dawn's early light, what?
Testing. Okay. I just apologize. I'm trying to figure this out on the fly. I just need to leave it alone. Okay. I think we can go to these. I think we can go to some of these charts today. I apologize for figuring this out on the fly, and I think I can at least. Unbelievable. Okay, back to it. Central bank this week were the big things. All right, and and we're going to get into that. That's what we're going to do right now. Let me just go to this and let's start talking through some of this stuff. All right. I just wish I could get my stuff off the bottom of this screen. That would be really nice, but. Because we're gonna probably get blocked out on some of these things, and I don't know how to get rid of it without blowing things up. Okay, so here's what we're looking at is, let me go to this. Federal Reserve, all right, our Federal Reserve held rate steady, and we're not going to be able to see these things. Okay. Oh, let me see if I can try. Boy, I'm just afraid to touch anything. Okay, so here was the deal, right? Stephen Moran was brought into the Fed, into the central bank, right? And I'm going to just skip over that. Stephen Moran, part of the Trump administration economic team, brought into the Federal Reserve to be a problem, okay, and to maybe call some things out. And we were almost sure he would be a dissenter. Okay, he would dissent. All right, we talked about that the other day. What does that mean? We also had a good feeling that Christopher Waller and Michelle Bowman would also be dissenters because they were dissenters last time at the last Fed meeting. They did not dissent, and Stephen Moran was the only one that dissented. Okay, and you can see all the way on the left side of this chart. Okay, you can see where things are at, and you see this one little dot. Right, all the way in that left grid, there's a bunch of dots up there, like 4.5, 4, 3.5, 3, and then there's one below 3. Right, that's Stephen Moran. Okay, and then they start projecting this stuff forward. Right, you can see in 2026, 2027, 2028. Okay, and then the longer run, and you can see what these dots represent is where they stand, and what it is, it's supposed to be an anonymous positioning of where the Federal Reserve members are, Board of Governors and the presidents. Where their positions are with these dot plots and what they're in, and this is a way for them to quote unquote anonymously communicate to us, but we don't ever see dot plots. You probably might hear the name dot plots, but you never see the dot plots and no one ever explains it to you. All right, so let me go to this one and show you the next one. All right, here's the next dot plot. Geez, wish I could get rid of this stuff. I just can't touch anything. Okay, but here's what we're looking at, right, is on the left is, okay, the dot plot released in 2025. On the right is dot plot released in September of 2025. Okay, so the dots on the left, okay, are June of 2025. The ones on the right are September. Okay, so again, you can see the dot down below. Okay, that's Stephen Moran, below 3%. Okay, now let's look at this. Let me go to this one. All right, and there's Stephen Moran. I've got that one circled in red. Okay. Now, let's go and look at these forecasts. Hopefully you can see this. I think it's okay. So on the left, we have change. These are their forecasts, okay, what they're looking at, right? So they also put out these forecasts, right? This is what the 500 economists at the Fed do, right, is they put together stuff like this, okay? And supposedly we're supposed to believe it. But you can see their range, right? Change in real GDP was between 1.3% and 2%, okay? And now they're at 3%, right? Most recent readings, all right, and that, so you can see the magenta, right? 3%. And this is, so it's outside the range. Okay, President Trump wants growth in GDP, all right? Scott Bessent wants it. Lutnick wants it, right? All these people in the administration want to try to get growth. This goes back to that Doge, right? The idea was to get growth and cut costs, and we bend the curve. We shrink the gap that we have, and that would be great, okay? So we are getting readings that are above the Fed's expectations. All right. So we can't forget that. All right. That's important. Something you're probably not going to hear much of out there. Then we get the unemployment rate is expected to be between 4.2, 4.6. It came in at 4.3. All right. Okay. So that's the unemployment rate. Okay. If that number climbs, then that is part of the Fed's dual mandate, right? Again, price stability. Okay. And jobs. Now, Stephen Moran threw one out there the other day, right? And this is probably an okay place to talk about it. Is he threw one out there and he said, the Fed has a third mandate now, okay, triple mandate. He called it moderate rates over the long term, okay. So essentially bring rates down, call them moderate, whatever that means. Again, that's subjective, all right. And And so again, price stability, maximum employment, and Stephen Ron threw the third one out there. And I don't think we'll see how much traction it gets, but it's moderate rates over the long term. All right. Then we get this next column, PCE inflation. That's personal consumption expenditures, right? This is one of the Fed's measures. If you follow this that much, you'll see that the Fed talks about this, and this is one of their preferred methods of looking at inflation. So that's why this PCE shows up in here. They get PCE, personal consumption expenditures, and then they get core PCE. And you can see the magenta dots inside both of those ranges. All right. Okay, so let's just keep building this case here. Let me go and look at this. Hopefully you'll be able to see this one. Okay, so this is over time again. So on the left, you're looking at 2022, and on the right, you're looking at 2024. All right, this over time, what happens? So you can see in 2022, okay, it was pretty, those dots are pretty stretched out. And then all the way, you can see, and I'll show this on the next chart. Let me just show it. I'll just show it here. Okay, so what I'm showing is how that converges, right? You get this width in the Fed thinking. Now this is 2022 to 2024. I'm just showing you how this stuff comes together over time and it converges as we go through a rate hiking or a rate cutting cycle. Okay, so that's what they're proposing is going to happen here, right? Is that, you know, Stephen Moran will come around and everyone will come together, okay? Because this is our current dot plot here, all right? And that this thing will somewhat morph together. That's the concept. All right, now let me keep rolling here. This isn't perfect, but let's go through this stuff. Now, the other thing I want to talk about here is this. Okay, and I think it's as good a place as any to put it in here. What I have here is money and let me go back. Let me go to this one first. Let's talk about this because this is more over time. Or you can probably see that one a bit. Okay, so what we're looking at here is money and money market funds. All right, and you're like, okay, where are you going with this? All right, hang in there for a second. So in mid-2010, we see $2.8 trillion in money market funds, okay? This is coming out of the real estate crisis, right? You know, rate cuts were really low rates, right? Rates are low in the U.S. Rates are actually negative in the Europe, right? Basically, if you put $1,000 in a bond market in Europe, in 5 years, you knew you weren't going to get $1,000 back. You were only going to get, you know, $950 back, right? Because the rates were negative. And so the question is, where are people going to put money then, right? Not money market funds because it wasn't yielding anything. So people who are retiring, it's like, it's all you can do is keep temporary short-term money in there. Now, fast forward to 2025, we go from 2024, we see it climb to 6.1 trillion in money market funds. By 2025, it climbs another trillion to 7.21 trillion, okay? The most recent ICI, okay, so anyway, the point is this, right? As yields are going up, okay, people start moving their money into these money market funds because they can actually get paid to have the money there, all right? And I'll come back to this one in a second. So the concept here is the Federal Reserve matters, right? When they move, well, the market matters, right? The bond market moves, and the Fed a lot of times plays catch up to the bond market, right? Because the markets usually know more than the Fed. The Fed has control of the short end of the curve. They don't have so much control of the long end of the curve unless they go into these crazy things they call Operation Twist and so forth, where they're buying out here and selling over here. They get into these convoluted things, right? Central banks do this stuff. But the real takeaway is this, right? Trying to boil this down is that Stephen Moran is definitely causing problems. Bowman and Waller did not dissent, okay? We thought there might be 3 dissents, and we talked about this corporate board kind of takeover. If Lisa Cook gets fired, then it's 3-3, right? You got 3 dissenters and you got 3 people on the other side of things. And we're looking at these money market funds, okay? And now we're starting to think about stocks, all right? What's going on here? If stocks go higher, what do people do, right? The media starts to sell people on the idea that stocks are going higher, and what are they going to do? They're going to say, wow, this is great. I'm making money in my 401k, and I should probably take some of this money out of these money market funds and put it in the stock market, right? And that's what a lot of these asset managers, will be telling people. Take the money out of here. Yields are going down, so you're not going to get paid as much, okay, by keeping money in these money market funds, and you're missing out on this great opportunity in stocks. So they're moving people back onto the risk curve, okay, from a de-risked point of view to now a higher risk point of view when stocks are up at all-time highs. And here's the problem is if we start cutting rates, right, we could overstimulate the economy. All right. We did this in 1998, right? We overstimulated the economy in the first half of the year by cutting rates. Then in the second half of the year, they had to actually raise rates a ton, okay, to basically stop a bubble from occurring. So that's the risk here. and I probably don't have the time to tie this back into the technocracy, right? But there is a connection back to what would the technocracy be up to here, okay? And I'll just briefly say it, right? Without going into detail on it, is my belief is I've seen them marketing. I've seen them all of a sudden already trying to make private equity, okay, an offering to the general public. Now, in the past, for the last 30 to 40 years, private equity has grown and grown and grown and grown behind the scenes. And it's only for, the people who are what we call qualified eligible participants, right? People making $300,000 or having a certain net worth or being connected, right? That's how you get in a lot of these private equity firms is you're connected, okay? You're in the DC bubble, you're in the Silicon Valley bubble, you're in the bubble, right? You're in some bubble somewhere and you know people and they get you in on these deals ahead of time. And that falls in this private equity space. But when you start seeing them making that offering available to the general public, you have to start asking yourself, like, why? Why now? Why now, right? Well, if they can push the stock market higher and they can stimulate this market and basically overstimulate it, and they can get people to take money off the sidelines out of these money market funds and push it into stocks, they can start to get out. Remember, we talked about the insider selling the other day. I don't think I have that one up here anymore. I think I took that one off. But we talked about these insiders selling. Okay, now, let me show you this too, right? Again, hopefully these dots are being connected, all right? And hopefully I can pull this together. And I'll take a look here in a second. This is frustrating because I can't get rid of my own name off the bottom of this thing. But what we're looking at here is we're looking at communication services have been the best performer of the year. What I've got are the 11 sectors here, okay, in the stock market. So we got the stock market, and then we can break it down into these different sectors. So we look at the communication services, 24.23% return so far, year-to-date return. If you go down to the bottom, you can see healthcare at 0.53%. All right. We know that Berkshire Hathaway, Warren Buffett, moved into United Healthcare not that long ago. We also see, the potential moving of money from these money market funds out of money markets, safe money, de-risked money, okay, earning decent yield the last couple of years with interest rates higher. Interest rates are now going lower. It's going to be real easy for financial planners to be pushing people out of that money because you got a push and a pull. The push is you're not earning as much yield. The pull is stocks are ripping to all-time highs, okay? So you got the push and the pull, the carrot and the stick, right? And they're going to try to pull that money out. And at the same time, they're offering private equity to people, okay? So this is a longer-term thing. I would have loved to have seen some more confirmation on this, okay? That we hit these harmonic upsides, okay, 21,456, whatever the number is. I've been obviously taken off my game here with this technological stuff. But the point is here's this cycle stuff, all right? Now, you probably can't see this either. Yeah, you can. Okay, so you can see if we're starting to come to a top in a market, healthcare starts to get bought, right? Healthcare is the worst performer so far, right? Here's the healthcare at 0.53% year to date, barely up, okay? If we go back to this, you can see, but they're starting to move into there, right? Warren Buffett moving into healthcare. Is he early? Probably. Is that his job to be early? Yes. Forecaster, right? He puts in a position and then they sit tight for a long time. So on the upturn, we see the financials, the small cap, right? The technology, the basic industry, capital goods, precious metals, gold, right? And energy. Energy really hasn't participated. You get to a potential stock top. Stocks lead the economy, okay? You can see how that curve rolls over. Then the economy rolls over. And then you get healthcare staples and so forth. Now, the stocks have not sold off. And let me see if I can go to this. Let's go. I'm just going to try to, not, don't even know if I can put myself, this is unbelievable. Okay. Every time I look at this is so frustrating. All right. Let's go take a look at this. All right. Stocks did not stop at the full upside objectives, right? In this particular case, make sure I can find the chart we want to look at here. Okay. So this will fill in. So this was our target, 65.74, okay? And it was our target for quite some time, right? We've been working on this for months and months and months, okay? And you could see the reactions. A lot of this is left over from the September contract, all right? But we're clearly above the bright green line now, okay? And you can see it did have reactions there. Let me spread this out since we've got the space. All right, so here we go. We get a reaction here. Let me put this on there. Okay, we get a... It just cascades, problem after problem. Okay, this, and then you can see it hits there, right? And then you can see it hesitates in here, okay? Then it gets above. Now, this is the December contract, and we may have gotten fooled because I was still watching the September contract. I probably should have been more closely watching the December and communicating that in here. You know, that, look, we hit it once, twice, 3 times, then it gaps through as we roll from September to December, and today's the expiration of that, right? Triple witching, like we talked about. And now this thing looks like it's up, and away. And we've got momentum, and every time that there's a momentum, a really strong momentum buy, it's getting carry through. Some people are coming in to buy this thing. Again, money moving out of money. So what's going on behind the scenes? The financial advisors are now talking to their clients saying, hey, you should be moving some of that money with the Fed on a rate cutting cycle. Okay, they're going down. That's going to stimulate the economy, right? It's going to pump money in the economy. Stephen Moran, right? He's voting low and he must know something, right? He's sending a message from the administration that they're thinking they're going to do 2 more rate cuts this year, and then they're going to do 3, 1 or 2 or 3 next year, right? And so the problem is that the currency market's starting to sniff this out, and I'm not sure they're buying into it, okay? And we'll talk about that in a second. But the key is you can see what's going on, right? The financial planners are talking, hey, move some of that money out of these money market funds and into the stocks, okay? And so that's the key, right, is that we're going from a less risky standpoint into a risk standpoint, okay? And for now, until we break below the 65.74 or we get new information, the markets are on the upside, and that is not a bad play. But you got to be careful that, again, the insiders are selling, okay? Are they selling? What's the breaking point? We've got Buffett moving into healthcare. Why is that? Because healthcare tends to perform in a down economy. Are they early? We got private equity, right? They're setting up private equity to let the public move into private equity, okay? They've never done that before, right? For 40 years, they've held that for their own little nest egg, and they haven't offered that to the public. What does that mean? They're offering to the public to maybe be buyers of it so that they can get out, a potential exit strategy. So it didn't hold at 65.74. Okay, that's the bottom line. We wanted to see what the reaction was. We got 3 on the December contract. Now it's through it, and this thing could rip. I mean, you can't rule it out. So when you get dips, if you want to be a buyer, we got to find things, right? We got to find things that are lower risk, right? That can perform. Like something, as much as I don't like healthcare, and healthcare is so flawed, there might be opportunities. This is why we're in silver over gold, right? Precious metals tend to be, gold's more precious than silver, right? Silver has that industrial component. So that's what we're trying to do, is play this weighted shift from out of one thing and into the other. Okay. Let's go and take a look at this. Let's look at the NASDAQ. Let me, all right. Okay, so let's take a peek at this. See if I can pull up. Okay, so here's our September. We don't want that. We want this December contract. Again, we put this a white dashed line. And you can see on Fed Day, it almost came back and retested the white dashed line. Didn't quite get there. All right, I'm going to put this in a square, a rectangle. All right, there we go. Okay, so it didn't quite come back and test it, but it tested it back in here. It almost got there here, okay? And it did get there here, right, which is, middle of August. On the September contract, it didn't get there. On the December contract, it did, okay? Then it sells off, comes back up, retests it again here, okay? And then it fiddles around there for a while. Then it gets above, and now it's ripping. Okay, let's take a look at this. We've also added in, let's look at the Dow, right? The Dow, 4 highs, all these yellow circles up there, 1, 2, 3, 4, 5 highs, and then now the Dow is starting to participate. Not nearly as much as the S&P and the NASDAQ. Again, we didn't have signals on the Dow. We only had signals on the S&P and the NASDAQ. So the Dow is now starting to participate, but it's starting to get a little bit overvalued, right? You can see with some of these pink dots in here, all right? So we're going to watch that closely. We also introduced this one not that long ago, the Russell 2000. Okay, let's take a look at this one. Let's look at it on a weekly first, okay? We had that shaded zone, which was kind of support, right? You can see I've pulled it off of these levels, and this level. And then you get this double top potential where these 2 yellow circles are at. But now it's starting to break through, okay? So the question is, what's up with the Russell 2000? Again, what is that? It's the 2,000 smallest stocks. Nobody ever hears about these stocks. It's also related to regional banks. It's related to, basically small cap stocks, right? If the U.S. economy is going to do well, this is actually a better place to be, is the Russell 2000, right? Because small business is the growth of employment, right? And it really is the growth engine, or it has been the growth engine. Now, that could shift, again, technocracy in the equation. But the point is, we're watching this one. Now, I also want to let's take a quick look at this. Let's look at this. Let's look at the Nikkei, all right? Because a lot of stuff, again, Bank of Japan rate announcement. And we want to talk about what's going on there here real quickly too, because this is important. All right. So again, this high back here in, 1999 or 1989, right? Time frame. 1989 to 1992. So basically late 1980s, all right, we get this high at like 39,000 in the Nikkei. This is a Japanese stock market, right? Monthly chart. Goes down, makes a big long bottom, saucer bottom, right? Comes up, retests it. We saw a bunch of volatility last year, August, September timeframe, right? We called it the carry trade coming off, right? And that's a topic for debt day. But the point is, now this Nikkei is pushing on new highs. Now, here's the problem, right? Here's the problem with this is, let me come back in here. Japan has been keeping rates extremely low, okay? That's not good for a lot of their insurance companies, pension funds, things that rely on the debt market returns, okay? What we call fixed income. So what do? People go offshore. They look for this debt other places. They use the cheap Japanese currency. This is a little bit the carry trade. They use a cheap Japanese currency, and then they take that money and they go somewhere else where it can earn more yield, right? They make the spread on that, right? That's been the game that's been going on in Japan for a long, long time. Then we factor in, when Japan's been issuing debt, people aren't showing up to buy it. So what happens? The government issues a debt. The Bank of Japan buys the debt, right? At one point, I think Bank of Japan bought like 97% of the debt being issued, right? So again, not a healthy situation. It's kind of like the right hand. It's kind of like taking money out of your left pocket, putting in your left hand, putting in your right hand, taking it, putting in your right hand pocket, and saying, "Oh, look at that! I just, $100. I just made $100. Look at this. Here it is in my right pocket." All you did is moved it from one place to the other, right? You took it, you created it out of thin air, this debt, and then nobody wants to buy it, so the Bank of Japan buys it, which is basically an arm of the government, supposedly an independent arm of the government, right? It's supposed to be operating independently, but all it's doing is, and what do they do with all this money, right? What are they doing when they create this money is they're buying exchange traded funds, okay? So Japan's been buying these exchange traded funds. We've talked about the weak government. We talked about this a little bit last night on the panel too. We talked about the weak government in Japan, weak leadership with Ueda of the Bank of Japan, and the weak leadership of Ishiba, who was basically on the ropes for the last 3 or 4 months since a big political election went astray. And now you see Ueda, okay, he's all alone because Ishiba's basically stepped down, and now they're looking for new leadership for the prime minister. And so they're on hold. They didn't do anything with their rates, even though they're talking about bringing rates up at the end of the year. Here's the thing, though. They went on this buying program to start selling off their ETFs, okay, that they've been loading up on, right? It's kind of think of it like a buoy, right, for their market, right? Again, you got to keep your stocks up. So what do? You go in and you buy the ETFs, right? And it kind of keeps a floor underneath the market, the Nikkei, right? New highs, right? That's part of what's brought it back. Here's the thing, though. It's going to take them at the rate that they just issued, that they're going to start selling off these ETFs. It's going to take them 100 years. So it probably took them 10 years to accumulate all these ETFs, and it's going to take them 100 years to unwind it. So again, another red flag that no one's really going to talk about, okay, that's going on that you just won't see out there. And so again, we're talking about, this opening up of private equity. We're talking about insider selling. Okay, we're talking about the selling off of these ETFs in Japan. Okay, so these are the kind of things that we want to pay attention to. That being said, the markets are above the full upside objectives, and until they break below that, or until we get further harmonic structures or we get further evidence, this market can rip, right? Because again, it doesn't make sense, but it is what it is, right? Because why? The Fed's going to come in and stimulate, maybe overstimulate by cutting rates, pulling money out of safety, moving it into risk assets, out of money market funds into there. So if that's $6 trillion, if that's $7 trillion in those money market funds, let me just show that again. If this $7 trillion in these money market funds, right here, if this goes from 7.21 back to 4 or 3, that means $3 or $4 trillion is now coming into the market. Okay, so that's what's going to prop this thing up. But the question is that a good thing? You're now taking people from a stable fixed income earning, right, maybe earning 4 or 5% in money market funds, now down to 3%, and now they've been put back on the risk curve. The question is what happens, right? And here's where I'm just going to briefly talk about this. This what leads into tokenization, right? Tokenizing these assets, right? If you remember, not that long ago, right after the big beautiful bill passed, they came out with these two things, the Genius Act and the Clarity Act. The Clarity Act is geared toward assets and tokenization, right? Stock assets and things like that. There's a long story that takes, it's not something we can really cover in here, especially not today. But this leads us to tokenization, right? And if you don't know what tokenization, and this is part of the technocracy, right? How they tokenize assets and basically get control of them through a convoluted pathway, okay? And we don't have control of them anymore, okay? So if you want to move money into a place where you can get access to it and you can get it into this stuff, you need to kind of create this overstimulated environment, all right? So I don't know if that's what's going to happen. I mean, I'm not sure what's going on. I would have loved to have seen at least these markets stop at that 65.74 and at least that 24,165 or whatever it was in the NASDAQ. I would have loved it, but it didn't. It just hit them a couple times on the December contract, blew through, and now it's off to the races. And that's the reality. Like, I don't know. What you're seeing here is we're thinking about this together. I'm questioning things, trying to figure out what the heck's going on. I don't know, right? But I'm looking under every rock I can find to figure out what's really going on here. Okay. So, but I don't know, right? I'll just admit, I don't know. Okay. But these are the things the movement from money markets to that's pretty straightforward, right? You got the push, you got the pull. That's pretty straightforward. The question is the private equity. Why are they offering that to us now? You know, the insider selling, how much is too much? You know, what's going on in Japan? They start selling these ETFs. You know, when does that break the camel's back? How many ETFs can they sell before all of a sudden the market says, wait a minute, you know, like this, you know, nobody wants these ETFs and it was really just all government buying. That's what we're watching for, right? Is this kind of stuff. And we don't know where this, again, we talk about Japan, we talk about Europe, we talk about sovereign debt crises, we talk about all this debt that the world has. At some point, something's going to bubble up. We don't know what the straw is going to be that breaks the camel's back, right? But we're watching it. And at some point, this debt's going to become an issue. And again, this takes us back to the technocracy and much deeper conversations. All right. Okay, so the other thing I want to look at here is let's take a look at the dollar. All right, let me see if this will actually show up. Well, I can make it show up. We can adjust it if we have to. So let's go to this. Let me go over and look at the dollar. It's kind of nice when things are this messy. I don't really have to worry about the quality of the presentation. We've already blown that. Okay, so here's the deal. All right, so we've got the dollar. The other day, let me go to this. Let's look at the euro. So the other day we were looking at the euro. Okay, we were saying it had a potential double top, right? These two yellow circles up here at the top, up in this area, right? The euro is the biggest factor on the other side of the teeter-totter of the dollar. Dollar's all by itself on, like, think of it like one big dude, right? Sitting on one side of the teeter-totter, and you got a bunch of little dudes, you know, the rest of the family sitting on the other side of the teeter-totter, right? And it balances out, right? Because the dollar it's the world reserve currency, so it sits on one side of the teeter-totter. Everything else sits on the other. And that, hopefully that's a good explanation. We talk about that a lot. Now, on the other side of that teeter-totter, the next biggest dude over there is the euro, right? So the euro, we want to watch that because it can have an impact on the dollar more than anything else, because it's like 50% of the weight on the other side of this. Why is that? Because, again, they took all of Europe, made one currency out of it, but then they all float separate debt markets, all right? We've talked about that many times. The point is we're watching this euro to see if it's a potential double top, all right? Now, the dollar, okay, we didn't have that the other day, and then all of a sudden it spiked down, okay, after the Fed meeting, and now we have a double bottom on the dollar. So it's the inverse, right? The dollar double bottoming, the euro double topping makes sense. One side of the teeter-totter, the other side of the teeter-totter. All right, so keep that in mind because a lot of things are going on here. And I had a couple notes. Let me see if I can find this. And the question here is this, couple things, right? The dollar bears, okay, people thinking the dollar is going to fall apart. They kind of expected more out of Powell, right? And he didn't give it. Stephen Moran did, but Powell didn't give it. Okay, what's going on there, right? Only the one dissenter, Stephen Moran, not Bowman and not Waller, all right? Does the U.S. warrant more than 25 basis points? Now, let's go ahead and take it. We can't. Yeah, we can look at this. We're good. All right, here's how we'll look at it. All right. Just have to do it in a different way. All right. Here we go. So here is the Empire State Manufacturing. Okay, I like to watch these numbers because I don't think these are that manipulated. we talked about this at the beginning of the show. The Empire State Manufacturing came in negative, right? It was expected at positive, what was it, 4.3. Okay, let me just blow this up a little bit for you now that you can see the big picture. So that orange is where it was expected, 4.3, and it actually came in at minus 8.7. Here's the deal, though. It's not that negative. It's negative, but it's not that negative, right? You can see back in here there were lows, and then higher lows, and this is still a higher low. Okay, now if we go down to this, right? So it could have a positive read next month pretty easily, all right? Let's go down here and look at this one, all right? Here is the Philly Fed. It's pretty positive, right? It was expected to be just barely positive, okay, at like 0.8 over in here, and it came in at like 23.2 or something like that, right? It came in very positive. Now, not the highest read. We had higher reads back in here, back in 2018, 2019, a couple here in 2021, and then this one here in 2025. So there's been higher reads than this for sure, right? And we had this big sections of higher reads. But this is a pretty good number. Okay, so again, this means that this is a good indication that manufacturing is picking up in the Philadelphia area. Now, the Empire State, New York, not so much, right? But again, that can flip-flop. So again, this was a big beat. We also saw initial unemployment claims drop again. Let's take a look at that one. So again, they popped up to 263 last month, okay, that big spike up, but then they came right back down. So these are the things that make you wonder, how much can the Fed really do, right? Moran wants lower rates. The administration wants lower rates, okay? But this is going to be this battle, and this is why I think this 10-year note's been struggling so much to make this move to the upper end of this. It's going to be a lot of work to get this thing up into this area, right? And this is the one we're talking about, right? This one right here, okay? Let me just show you this one again. It's this one, this upward slope. Look at how long this thing is spent down in this area, right? It's really, really struggled. It's held up, right? We got our white dash line, the 111.10 we've been talking about. We got the upward sloping trend channel. There's a lot of things here that tells us the market's going higher, right? President Trump wants it higher. The administration wants it higher. That means lower yields, right? As this thing goes up, means yields are coming down. They want this thing higher. They want it to follow this trajectory up into here very badly, right? For many, many reasons. Stimulate the economy, refinance the debt. These guys got put in I'm going to leave that alone, because my mind's sort of changing on a few of these things. But the point is, this thing's been a mess, right? But it is making progress. And the question is, longer term, I think interest rates are going to go higher because at some point we're going to get some kind of a sovereign debt crisis somewhere. And when that happens, it's going to be a contagion, okay? And it's going to lead to higher rates everywhere, and it's going to cause big problems. And that's why we're looking for ideas on how do you position for that stuff in advance of that, okay? And I think some of these things are trying to get off the network a little bit, like things like Zano, right? Things like, Freedom Dollar, things like that we're going to be, I really, really want to talk about because I think you're looking for solutions. Like how do you start to diversify? And gold's a good option, right? Silver's a good option, but you can't put everything in there, right? And some people say, oh, just dump everything in there. Just pile into these precious metals, right? Some at home, some in this, some in that, just all precious metals, and it's like, that's dangerous. Not all stocks, not all bonds, right? Not all real estate, right? Not all. And some of the stuff probably needs to be privacy, especially if you start to believe and analyze for yourself and start to come around to the idea that, yeah, I think this technocracy does look like it's moving forward. It's moving forward very fast. What are my options? Okay. And that's the thing I wanted to point out. All right. Okay. So hopefully we got through that stuff. Let me just blow through a couple of these things, a couple headlines. I'm not going to go over to the sheet because who knows what will happen when we do that. All right. Trump threatens a license on TV stations, right, that criticize him. Again, is this fighting back? Like, this is what we want, but do we want it for the right reasons? Okay. This goes back to potentially that Curtis Yarvin thing. I mean, these guys were alarmed by this last night. I know where President Trump's coming from because he's just been bashed in the media for all this time. But my thoughts are starting to change on this a little bit, right? They're not changing overnight. They're not changing in a week, right? But they are changing as I'm learning more, right? And so I'm looking at these things slightly differently, okay? Because again, back to Charlie Kirk, back to, J.D. Vance, back to some of these things that are just red flags, If our facts are right, okay, then some of these things are really red flags. All right. Okay, and then we talked about that. Trump looking to fire Cook again, right? He's back on that thing with the Supreme Court, right? Looking to fire this Lisa Cook for mortgage fraud. The problem is that Scott Bessent apparently did the exact same thing, right? With a home, he had 2 homes, and he did this same, whatever she did, he did the exact same thing apparently, or at least that's what the media is trying to tell us. Let's let a little time go by and see what happens here. It's kind of interesting. We talked about the Bank of England holding rates unchanged, Bank of Japan keeping rates steady. We talked about that. Here's one more thing I wanted to add with Japan. This is very questionable with these tariffs, right? President Trump negotiated a heck of a deal with Japan, and somehow they were able to fork over $550 billion. Let me just show you this again, right? They were able to fork over $550 billion. It's the one on the lower left, right? The one that says $550 billion. But you can see this is the foreign direct investment that's been coming into the U.S. that President Trump's been drumming up. The $550 billion on the lower left is Japan. And this was a blank check. So the question is, how did they do this when they're in such financial difficulty? Okay. Their bond market isn't good. They're trying to raise rates. Their political scene isn't good. Their Bank of Japan governorship isn't good, right? They're having to now start dumping these ETFs. They seem like a ship without a rudder, and yet somehow they shelled out a $550 billion check to the U.S., blank check to use however they want. Okay, so you gotta think about that and wonder what the heck is going on. Again, back to this technocracy, right? We gotta think a little differently. We gotta think about this stuff and say, what does that mean? That's not normal. That's not normal stuff. Okay, all right. Okay, keep moving on here. Trump says Putin has really let him down. Right? This is putting Russia. Putting 2 things quickly out of this, right? It puts pressure. The goal is to put pressure on Russia, okay? We know that Russian assets in Europe were seized. They take the revenues, the interest off those revenues, $300 billion, and they feed that back into Ukraine to continue fighting Russia, okay? They can't take the actual assets because you're going to break these international laws, but you can take the interest off those assets that are being held, right, in the sanctions. In wartime, you can basically say, yeah, Russia, you can't have your money back, but we can't take it. We can't use that money, but we can use the interest off that money, right? So I'm sure there are games getting played there. Okay. It hasn't really seemed to impact Russia that much yet. All right. Sanctions, right? Ukraine seems to say they want sanctions. Starmer, right? Yesterday, President Trump was finishing up his trip to the UK with the king, and Starmer said that, he threw his 2 cents on this whole thing too. Okay. Again, Starmer probably didn't carry much weight. That's Keir Starmer of the Prime Minister of England. Okay. Here's the thing. This is the real takeaway though. President Trump is saying if the price of oil comes down, Putin will drop out of the war. Okay, so this is the new angle, right? To put pressure, downside pressure on oil. What have we been talking about in crude oil, right? This 63.18 holding. Who's going to put pressure? President Trump's buddies, right? The U.S. and President Trump's buddy, right? Mohammed bin Salman of Saudi Arabia. Saudi Arabia says, hey, we're okay with putting more pressure. We're okay with... They don't want to put, when oil's cheap, they don't want to overdo it because they're not making as much revenue, right? They see it as like, look, we're going to wait till oil prices go back up, and then we'll start selling. That way we make more spread on what it takes to get it out of the ground and what we sell it at. They don't want to sell it when the margins are tight like this, okay? But Saudi Arabia is apparently willing to step up and break outside the OPEC rules and say, yeah, we're willing to sell more. That's going to put downside pressure on crude oil again. That's one of those things that's going to add pressure on the downside there. Okay, so we know we talked about this week. Trump had these good questions around the ethanol and the energy, and we showed these numbers. The surplus numbers expected in 2026 to be really high. The IEA, okay, which is the governing or the statistical data gathering agency around the crude oil markets, they came out and said 2025 surpluses were high, and they think 2026 surpluses will be even higher, record highs, right? So I don't have that chart up here anymore. I think I dumped it, but the point is, this is confirmation of that, and Saudi dumping this on the market, right, is going to create more surplus. Okay, it's going to put more out in the market, which is going to put pressure on the downside, right? Supply and demand, lots of supply, steady demand, unless demand picks up, right? But this is going to be more supply on the market. So all things even, demand stays the same, more supply comes on the market, it's going to put downside pressure. All right. With that in mind, right, we also have Indonesia, or not Indonesia. We have, that's a whole different story. We have India, okay. They need to be, so President Trump is putting pressure back on Europe to say, hey, if we're going to put sanctions on Russia, then you need to also be playing ball with us. All right. Again, a lot of stuff going on there, too much to uncover here. But that's been the pressure I think he was applying yesterday, and I think he's applying overall. Then he's applying 50% tariffs on India if they continue to take oil from Russia, refine it, and put it out on the market. Because why, right? That allows Russia to continue to operate. Same thing with China, right? China's taken Russian oil, okay? And we saw those three meeting, Modi and Xi and Putin meeting recently, okay? Again, back to this quote unquote BRICS thing. I'm not a believer in BRICS, but the point is they still can work together even without a BRICS currency, right? They still can team up against the U.S., right? And it's three formidable forces. You're talking about three powerhouse economies. I mean, pretty powerhouse, right? I mean, decent sized economies together, right? They carry a lot of weight, right? These countries carry some weight. So again, lots of pressure back on these sanctions. All right. So, and then soybeans, right? Soybeans. So President Trump and President Xi are going to be talking today. Couple key topics, right? Obviously, we got the rare earth metals. We have the NVIDIA chips, okay? The H20s versus the Blackwells. Is China going to get them? Does China even want them? China came out saying yesterday, yeah, we don't need them. We're making our own chips now. It's probably a bluff, right? But we have seen the rare earth metals. China has been releasing the rare earth metals and magnets back to the U.S. The flows are up over the last month or so. So that's a good sign that they're trying to play ball. Now, another bartering chip in this is going to be soybeans, right? Soybeans are up on the expectations of a positive call coming out of this, okay? Again, soybeans are a big negotiating chip. We saw this during Trump 1.0 when he created the trade deal with China right before COVID hit, right? He had this $50 billion deal that China was going to buy the soybeans from the U.S. The problem is it was never enforced, and it kind of blew apart because COVID went front and center, all right? So again, that deal kind of fell apart. Here we are again, right? Doing this again, and it's probably going to be, don't be surprised if this doesn't get frustrating and it's like deal on, deal off, deal on. It's like flipping a switch, right? Oh, we got a deal. No, we don't have a deal. Yes, we have a deal. No, we don't have a deal. That's what we saw in Trump 1.0. It was nonstop, like a little kid flipping a switch, right? That's what it felt like. And, when you're trying to trade these markets in position and it's like, it's on, it's off, it's on, it's off, you're like, stop flipping the switch, right? But I wouldn't be surprised if we get back into that situation with China. The good thing is President Trump's come at it from a different angle this time, and he's using places like Mexico to put pressure on China. Canada put pressure on China, right? Vietnam to put pressure on China, right? Taiwan to put pressure. So he's using these other countries to put pressure back on China. And so that's that. So let's take a look at, we'll wrap up with this. I want to take a quick look at this corn, all right? And also soybeans, just so we can get a look at what's going on with this. Why can I not get soybeans? All right. Okay, here we go. Okay, so here's our corn. There we go. I'm going to slide this up just so you can see the bottom of this. So we've got this upward sloping trend channel. It seems to have reacted this. Again, this is a monthly chart, so this goes all the way back over in here to 1972, right? And then we get this basing here in 2003, 2004. Okay, so again, right before the ethanol craze, okay? This is right before the ethanol craze. And we get this big run up, right, based on ethanol, then a sell-off, then a run back up again, then a sell-off. Kind of a sideways pattern in here for a little while, then another run up to the upper end of this trend channel, and then here we are again down in here. So we could go sideways just like we did here for quite some time, okay? But again, this is a diversifier, right? Corn's depressed, probably not get in a lot of trouble with it. $3 bushel is a big psychological level. That's like right here. Here's the $3 level, $3 per bushel. Okay, so again, big psychological level at this $3. So again, not a lot of downside risk, but potentially a lot of upside potential in this, right? Back to, we don't know what can happen. Okay, all we can do is say, look, it's at depressed levels. Again, think of Intel, right? Think about Intel. A couple months ago, Intel was left for dead, right? No foundry business, chip business isn't going well. Foundry meaning more of the AI chips. Everything looks bad. Intel, again, we see President Trump calling for Lip Bhutan, the CEO, to be canned. Lip Bhutan comes in the office the next week. Everything works out, right? Now, all of a sudden, President Trump's on the bandwagon of Intel. Not only that, the U.S. is now a 10% stakeholder in Intel. And now NVIDIA's pumps $5 billion into Intel. And Intel's up 25%, okay? So the point is we don't know that these things are going to happen. All we can do is try to find low-risk spots with the idea that something's going to happen in this corn, right? And so What's great is when we get a harmonic structure, because we get a kind of a time frame as to when this, we can look at what's the size of the move if it works out, and we can look at what the statistical time frame is on it, and we know there's energy there. So that's what's nice about these harmonic structures is we can go into these things and say, okay, we've got a setup, we've got a target, and we know about what our time frame should be if it works, right? Same thing with the stocks. We had the 65.47. That was a 13% move up from already pretty elevated levels. Hard to believe that it can happen, but now it not only got there, but it pushed through. Okay, so it's running even further. That's a nice thing about the harmonic structure. So we'd love to get something in corn where we can actually say, okay, look, this is what we're shooting for over this period of time. Now we just have to try to stay alive in it and let it work out. That's why we like that, because we can actually contain it in time and price. When you just come into corn like this, when it's at depressed levels, it could sit sideways for a long time. And if you're not willing to trade it, where you're buying the dip, selling the rally, buying the dip, you can still you can do option strategies at this point in time too, right? You could call some kind of a opposite of a bear put spread like we have in that corn, in the crude oil. You could actually look at this from another perspective and say, okay, I'm going to position for the upside, but I'm going to try to make money on it while it's potentially going sideways for a while. So there's a lot of different ways to go about this. Let's look at soybeans real fast. I think I've got that 21. Yeah, here we go. There we go. This is it. All right, let's take a look at this. Okay, so here's soybeans on a weekly basis. And let's look at this first to see what the reaction's been. We'll go to a short-term chart. Okay, so we've got a little bit of a reaction. This is what? September 18th. Okay, so this is the reaction overnight. Wow, we've gone for a long time today. Okay, part of it's just hiccups everywhere. So the soybeans needs to break through this green line. If it breaks through that today, okay, based off these talks, you can use that green line, right, to measure the risk against. I doubt many people in here are going to be trading soybean futures on the short-term time frame. But here's the takeaway is that if I look at this, let's just go to this chart. Okay, we've got, let's go. What's a good way to look at this? All right, so a couple weeks ago, we were talking about soybeans being a good buy, right? And it was basically around this area. I think it was like end of August. Sometime in August, right? What's that been? 4 or 5 weeks ago, we were talking about this soybeans. We had a pretty good spot, double bottom, a couple points down here. If it held, okay, there's a good chance it's going to go back up to this red line. This is a daily chart. Daily chart's a good place to go, right? Nice middle. Fund managers looking at it, individuals look at it. Everybody kind of looks at the daily chart, right? It's a nice, not everybody looks at the monthly chart. Not everybody looks at short-term charts, right? But everybody looks at the daily chart. So there's a good chance that this thing can make a run up to this 1106, right? That red dashed line, or the red line, right? That's kind of a temporary target. If it can break above there, now the trend has kind of changed, right? Right now, the trend is still down, but this is a reversion to the mean trade. So it's not without risk, but there's a decent chance. And why is that? Because it hasn't touched this red line in a long time, right? It hasn't touched this red line since 2023. So there's a good chance that it's going to come back up and find this red line, all right? And so it's a trade. If it pops above that, then great. Now we potentially have a trend change on the daily time frame, and we can start buying the dips and selling the rallies, right? Potentially. All right. So again, what's going to come out of this trade meeting, this trade talk today, and what are they going to do? Are they just going to toss it around like a football? Be like, okay, chips, AI chips, rare earth metals, crude oil, Taiwan could enter into the equation. And then, of course, soybeans is going to be a topic today. So what happens when they toss this thing back and forth? Does something come out of the soybeans today? And is it also, and why does it matter, right? If corn's going to rally, so are soybeans. These things are kind of related, right? They don't always move together, but they tend to move. The agricultural space tends to move together. So if we're starting to see a bottom in corn, we're potentially starting to see a bottom in soybeans. And what can make a change like that? Well, China buying $50 billion worth of U.S. agriculture again, right? That would now create a stimulus for a potential short-term bottom, which would push us up to that red line, a reversion to the mean. So again, it's a good short-term trade. It's a good way to watch agriculture. Soybeans and corn, good ways to watch it. Wheat kind of does its own thing. Wheat sort of does its own thing in some ways. All right, so hopefully that's good. Let me check in here and see if there's any comments. Okay, Rachel Hawk, nope, went with the graphics. Okay, yeah. All right, so we went through the no sound again. We went back to the sound. Sound back. Okay, good. Okay, LOL. Private equity is lucrative. It is lucrative. This is where tokenization comes in. Yeah, I think you're right, Geo Rich. And, um, it's kind of good to see, like, our numbers we don't have a huge group, but once I see that this number stabilizes or is growing, then I know we've got 15 people who've kind of heard the story and where we're going with on technocracy and things like that. Once people have a foundation in that, then we can move on to what is tokenization, right? And I'm learning too, right? I don't know very much about tokenization. I know enough to be concerned about it. I know enough about what they've done before with NACs, right? Natural asset corporations and other things. I know what their agenda may be. Okay, I know what they've tried before, and it's shocking. It's shocking to the conscience, really, what they've tried before, how they've tried to take some things captive. Tokenization is the way to get there. It's the way that they can. All they need is an event, right? Like a COVID, a war or an EMP strike or some kind of a cyber attack, right? Something like that. And all of a sudden you can start rolling out tokenization. You can build a story around it. Oh, this is for your own good. This is security, right? This is, it's going to give us more ability to track this stuff, right? It's going to be good for you. Somehow they're going to tell the story. Just like they told us, just like they told the UK. Yeah. You need to invest in wind and solar, right? This is great, right? It's good for the environment. It's going to give us lots of energy. And now they're buried in a hole. They don't have a lot of energy. They're dependent upon this wind energy now. They spent a lot of money on it. It works great some days when the wind's blowing, but other days it doesn't. And now they're sort of stuck, And so that's the key, Do you sort of get stuck like that on a bad story? Where are we on this whole thing? This tokenization is very, very concerning, but it's also very positive for, if, again, it depends on who's going to control this stuff, right? And are they a good force, a force for good, or are they a force for evil? That's the question, okay? And that's really what we're dealing with here. All right. And then Geo Rich Robinhood. Yes, Robinhood. So we've got Vlad Tenoff. We call him Vlad the Impaler. And there's people popping up at Robinhood, other ladies that are there. That's another story, right? But yes, you're hot on the trail, Geo Rich. Okay, the media lamestream or alternative, because there's a difference. Media lamestream or alternative. Yeah. Hopefully I explained that. Look, I mean, even Fox, 98% of the time will tell you decent stories, right? It's like, oh, okay, that's a good story. That's a good story. That's a good story, right? But it's the 2% where they just, they take your election, like they did in Arizona, or Rupert Murdoch was in the UK the other day, right? Rupert Murdoch, to me, just can't be trusted. And Paul Ryan. I mean, he's on the board there. I don't think he can be trusted, right? There's people and, in the Murdoch sons, I mean, can they be trusted? So, that's the thing. I guess that's hopefully that's the right question you were asking. All right. Don't forget to put the link in the comments for that video. Yeah, I will do that, Rachel Hawk. I'll put it in right after. Thanks for reminding me. And, good recovery, Mav. All right. Thanks, Crash and Splash. I know. Yeah. I mean, yeah, we got things falling off the plane here and we're barely keeping it together, but I'm glad at least, we I think we kind of get, anyway. Thanks, everyone. Have a blessed Friday. Thanks for coming in here. Hopefully, again, think of questions, right? Great place to go to generate ideas, right? Armstrong Economics, right? I don't always agree with Martin Armstrong. I think he's very good on some things, and I think he's weak on others. But generally speaking, he's on hot topics around the world, and he's a great place to generate ideas. Armstrong Economics, Martin Armstrong, right? Controversial character, storied background. Definitely a self-promoter. He has issues, but all in all, I think he's a good place to generate conversation. So I read it. It's a great thing to read, think about, generate questions, come in here, we can figure it out together. And I love when people, you guys are like Geo Rich is asking questions, Trump is asking great questions. I mean, everybody in here is asking great questions. And so that's the key, right? Again, we might be small, but the key is to try to be mighty and uncover the truth. All right. So again, come with questions, and I may not have the answer. Someone here may have the better answer, and I mean, why not, right? Yesterday, I didn't have audio. I didn't have video. I had video, but Anyway, people's comments in here are just as valuable as mine, that's for sure. So with that, have a blessed weekend, everyone. Thanks for joining us. Thanks for sticking with us. Thanks for going through whatever we're going through here. And we'll see you on Monday. Thanks.